Hey, what's up everyone? We just wrapped up our session, Rejecting Tested Levels. What is that all about? Well, price moves for one very simple reason. Orders are filled and price rejects key levels. So in the session, Dad rips into the detail of what those key levels are, how to identify them, and what might keep you from deciding to enter a trade when you cannot find a key level. So anyway, stay tuned, enjoy the session. We'll see you on the inside. So let me show you what the current plan is, team. So here we go. This is our plan for the weekend. We're still ironing out a few details, but hopefully you can all see that because now the chat's gone. But putting together a full-on day for us, guys. So starting with a meal, pretty close to our venue to make it pretty easy to go from one to the other. Getting to Horizon after that, and then we've decided to make this first session, which is going to be like an overview of all things new, which will be quite light. Like we're going to go at the pace of, it is a shift. So that would be the ideal session for someone brand new to actually listen into. So we thought we'd open up that one session for the general public, anyone who wants to come along that's not actually part of our team yet. And then after that, we'll shake some hands and say thanks for coming. And then we'll get into the deep dive, which is the deep dive 1 and 2 with Q&A, and that's going to be Dad going proper deep on all things with what we've got coming up. So I'm going to unshare that thing. There we go. Stopping sharing. Hopefully you guys can all see that okay, but this is going to be something special, guys. So Dad and I are going to be recording content for the next few nights and redesigning resources and all that kind of things to make sure we've got everything nice and smooth and lined up for everyone to get this at the same time. But that event is going to be super special. So 28th of Feb, Saturday. If you're in or around Auckland, I know guys have already been messaging me for details on times to organize flights. So it's going to be super fun to have our extended family from around the country gathering together. So if you can make it, make it. It is going to be well worth it, guys. So I don't want to waffle any more than that. I don't really have any other announcements. Still figuring out some pricings and things. We've got to figure out some numbers to make it slightly cost effective for all of us because of what we're going to include there at the venue and things like that. And yeah, so we'll keep you posted. We'll post some things in the chat in the upcoming days. But for now, everyone, shot for getting on promptly. We're in for it tonight. So I don't want to waffle anymore. Dad and I have spent a lot of time thinking about how we can really maximize the time we have now in the lead up to our shift that's coming while still providing some value that will cross over well to it without giving away too much yet. So we've done that. And so tonight you're going to hear a little bit about what rule number 1 looks like and how it's applicable right now for the way that you're trading, but more so obviously for where we're going. So Dad, I'm going to find you and pin you so we can rock and roll. There we go. Pin. There we are.
And
all right.
I might as well share my screen straight away. Should I jump right in? Screen share.
Yeah. Let me give you permission. You didn't ask, did you?
I didn't ask. Please, I want to share my screen.
There we go. You may. Over to you. Let's rock.
I just realized how powerful that made you feel that you have the...
Just for a second. Just a tiny little digital flex, right?
Okay, let's see if I got the right one. Yeah, here we go. You've got to move some pretty faces up there. I'm now screen sharing. I'm coming live from East Auckland. Here we go. You know, every time I do some training, I think, well, this is going to take 20 minutes. I mean, tonight could be shorter. Who knows? I think it is. But obviously, Tyrone already said it that everything we share up until the launch of our new radical reformation of trading, everything we share is going to be relevant to obviously the new thing we're releasing. So tonight I'm not using any indicator. I've got a version 4 up there, but I'm mainly looking at key levels. So last week was about looking at chart patterns at key levels, but I want to go one step deeper tonight. We almost kind of covered it, but just taking it a step deeper. And that is what I think I said last time. The journey of my trading is the mystery was what causes price to reverse and go the other way. And so that's always been my quest, because if you can find at what point price is going to reverse and go the other way, well, that enables you to be a profitable trader. So we're looking for, why does price reverse? What was at that point? So initially when I was being trained in my early days, it wasn't really emphasized. So it didn't give me a lot of certainty or security or kind of the faith to press buy and sell. And sometimes it worked, sometimes it didn't, because I didn't really understand, how price likes to reject key levels. And so we are looking at rule number 1, 2/3 of rule number 1. We're not going to give everything away, but rule number 1 is the most important rule for where we're going, but it's absolutely essential for now. And that is, before we've talked about rejecting a level, but we're going to take it one step deeper. And tonight we're going to add another word. It's rejecting a key tested level. All right, so I'm going to say that again. We're going to talk about rejecting a key tested level, because when price tests a level, that becomes a high probability reversal. That price is going the other way. So an uptrend, if it tests a level at the top, that can be a good indication that's going to be a turn to a downtrend. And so I've realized in my research and training and just general trading through profits and losses that when price actually tests a level, it becomes a high probability trade. Like I think I mentioned it. See, this is going back to last Tuesday. I took a trade on the NAS, and there was a level that it hit once, hit twice before I was trading. I turned on my computer. I can't remember the time of the trade, but the third time it hit that level, the first red candle, boom, I pressed sell. And it wasn't a big trade because there was a key level lower down, but it was still 22 pips. And the key was there, that level had been tested. It wasn't just like looking at something like this. Price has gone up, coming down, but there were 3 highs where price came up, came down, came up, came down, while I was still making my coffee or even sleeping. And I turned on the charts where price was moving up something like this. And I thought, man, 2 rejections, and there were 2 key levels. If it bounces off that, I'm in, and there was an easy 22 pips. So it's not just rejecting a level, it's rejecting a level that's been tested. So what I mean by tested is that it hits that level more than once. Sometimes we'll look at examples tonight. Sometimes it can be bunched up, and sometimes it may be spread apart. Like the trade I took, it hit once, came down, hit a second time, came down. The third time I was in. And so when a level has been tested, it means, for example, if we're having prices moving up, there's a bit of a bullish trend, and it bounces off a level, it means there are no sellers. There are no buyers left at that level. So whenever price tests a level, it means there are no sellers. Like here, for example, it means at this level, at this time, there were no sellers left, only buyers. And so we want to be able to get in with confidence in our trades at a place where we know price is definitely turning the other way. So I thought I'd start just with the big picture. So I'm going to go to this blank chart with no lines. And let's just change it to 4 hour. We can see this works on every time frame. Although most of us are in the 1 minute, to 2 minute zone in our trading, we can just have a look at this chart. So I'm on the US 30. And if we just look, can you see something happening up here? Look, there's price making a high, made a slightly higher high there, slightly lower high, equal that high. So that is telling us, and I haven't got any lines on the chart, but I can guarantee you price was rejecting off something. Let's have a look. I mean, we've got no lines here, but if I just drew my own little resistance zone, so if we just drew a zone here, we can see, I mean, this ideally should be red, but you can forgive my coloring tonight. You see, what is this telling us here? It's telling us there are no buyers above this level. So above 49,676, there are no buyers. And so this is a 4 hour chart. So remember, when you see something like this, look, that candle kissed that level, that candle kissed, that candle kissed, that kissed, that kissed. I mean, there's 5 candles there. 5 candles that for 20 hours, price couldn't break above that level, and down it came. What happened again? It moves all the way up, back into the zone again, and you can see price tested it twice. So 8 hours, price couldn't break, down it goes up again. This time there's another 5 candles. So for 20 hours, almost the whole day, price couldn't break above there, down it comes. And again, you can it's like, I call it reading the B note. It's an old saying. Anyway, I won't go down that track for that saying. But again, look at this. We can see there's about 6 candles here. So there we got that level is being retested all the time, and price is not breaking higher. And whenever you get these tests, you often get a big move down. Not every time, but generally, the more tests you get, the bigger the move. So, I mean, the first red bearish candle down, I mean, let's call it, 1,000 pips. So we see this on higher time frames. Again, price comes up here again. Look, 3 candles, 4 hour candles couldn't break through for 12 hours. Price hit this zone and down it came. So when you're trading, I wanted to make the point is, don't just look at the immediate high, look left and see. There was a saying, ALL in trading, in trading, which means always looking left. This is telling us a lot of information. So by the time you get to here, you tested multiple times. That drop wasn't as big, but still 650 pips. generated a big downtrend. So this works on every time frame. If we just, let me be a cheapskate here and just copy this down, we can see the same thing happening here. We see price came down from those highs, made this low up and didn't quite make that low, but again, it hit back to the zone. And what is this telling us here? That there are sellers. This would have plotted a support zone. Well, I don't have to draw it. You can get the idea here. Price came back again, and look at the tests. All those candles weren't together, but again, over, if we took from that candle, Ty's taught me well, that's over, what's it saying, 16 hours. That is a lot of testing, couldn't break through, and then price goes up. I mean, that candle would have opened lower. That one closed down there, but let's just say that went up, 750 odd pips. So I'm looking first at the high time frames, but again, don't just look at the current grouping of wicks at a level. Look left to see, has price broken lower? And the fact price couldn't go lower there, that means obviously a double bottom. You could draw a trend line and get off a trend line. But anyway, that's just the higher picture. So there's no lines. That's just general kind of interpreting of the charts. But if we go to my 1 minute, we'll look firstly at the Dow, and then we'll look at the NAS. So I've already got pre-lines drawn in. I've drawn in some big round numbers. I've just got big round numbers. I've got some fibs like I normally have, and some pivots. Now we are going to learn a lot more key levels moving forward, but this gives us a good picture. So we just can have a look and work out, where are there areas where prices tested a level, and they come in different forms. So as I said, it's not always where they're grouped around a key level. Sometimes we can see, for example, here's a good example. So here price came down, and it's in this example, we've just got 49,400. Price came down to this big round number, rejected it, tested again, went up, came below, broke below, went above. Look at all those. This is a 1 minute chart. Tested it multiple times, broke below, tested it from below, broke below, went above, again, broke below. So obviously, just looking left, you can see that this is a key level. Now, there are other things to take into account because we haven't got an indicator on that would help us. But you can see again how after those multiple testings, although there were pullbacks, we can see, there was quite a big move after that. I mean, you maybe wouldn't have stayed in all the time. And this is in low volume time, but we're still seeing again, always look left to see, is this level being tested? That makes it a key level. And then when you see a clear rejection, so we're looking, the phrase tonight is rejection of a tested level. So by the time we get over here, can you see all these candles? They are testing that level, which has been well tested. So by the time you get a bullish candle, that makes it a safe trade. But anyway, let's just go to where there's a bit more volume. This is during the day, and you'll pick up. So here we can see this morning. Here's a good example. So we are going to take it one step deeper when we release our new revolution. But here's a very good example. Okay, this is quite late in the New York afternoon. But look at the testing around this weekly pivot. We can see price tested there, rejected it, came up multiple tests, and eventually down it goes. So this is what we would call a level, a rejection of a tested level. Multiple candles, testing makes it safe. This is not as safe. When you see just 1 wick, okay, there were 2 weeks there, that's not as convincing. But when you get a cluster, so we can see here's another example. So look at this big run number. Now we're looking at 49,400 again. We looked at that earlier. We can see we were looking over there. Look at this level, key level for the day, always looking left. So where was I looking now? So here was a nice little, how many pips was this one? That went up, call it, 50 pips, that trade. But again, if you're trading, I'm always looking left. Like that morning I said I got up at the NAS, I was looking left. I saw 2 rejections. I got in on the third. In fact, it could have been the fourth. I can't remember. But look again, price came up, testing 49,400, double top, rejected, down it goes, comes again. Look at the activity around the big round number. Look at the activity about the big round number. Again, multiple tests, and then, obviously the new strategy would help us, and that produces great signals. Now, these are examples where there's only one line. What we like is if they are what we call a cluster. So obviously where we're going, it'll be a little bit more clear, but here's a great example. So, I mean, I've drawn this trend line very quickly, but look at what's happening over here. We can see again, there's multiple tests. Again, we're looking at at rejection of a tested level. And we can see how much price has tested this level. We've got another big round number here. Now we're down to 49,300. We also have got a fib. That's a 236 from our 4-hour chart. Plus, we've also got a trend line. So looking back, we can see how price respected this trend line. And there's also there's a monthly pivot over there. But again, look at the testing that's taken place here. We've tested, broke through briefly, came up, tested again. And so when you see this, especially now we're looking at multiple levels where price tests up, tests down, up, down, up, down. Price is like bouncing around. That's it's a small example, but it's price is consolidating for a breakthrough. And inevitably, breakthroughs come. And this one, I would say, was quite predictable. It could have gone down. But we can see these big candles coming down to this trend line, down to this key level. That would give us an idea that this trend line is powerful for support. Look there, double bottom, trend line, and a monthly pivot, up price went. So when you see this testing and the sellers try to push price down, they bounce off the trend line, consolidation, bullish candle, and look, price from them rocketed up. How many pips was in that move? 78. Yep, that was quite a big move. So again, looking for price rejecting a tested level. So you'll see them once you see them, you can't unsee them. And I mean, the good news is that with our Revolution, our indicator that's coming out, version 4 was great, but there was a lot of noise in terms of the trend zone. So, I mean, I found it sometimes even hid the key levels we were looking at. So they'll be much more clearer moving forward. So again, once you see it, you can't unsee it. So here is another example just going back. We can see, look at all these candles, couldn't break below the 236 from a 4-hour chart, and always looking left. Look, it tested it there, means it's significant, did break through there, came back, test, stretched out to the trend line, stretched out to a monthly pivot, double bottom, rejection, and there price moves up again. I mean, these are absolutely everywhere. I didn't go back practicing these. I'm just scrolling through. I just put a few lines, and they're everywhere. Look here. So we can see, here's another example. I mean, literally, when you see this, you can't unsee it. And when I'm trade, I'm looking at these key levels all the time. So we have a big move up. Price comes back to this. This is a weekly pivot. Now, all I've got is the S3, R3, S4, R4, for the daily, weekly, monthly, quarterly. So we can see price shot through, came retested, shot up, came down, retested. So again, this level, price has rejected a retested level. And that's when you see these, there's always wonderful moves that comes up. What have we got here? We got a big round number. You can see how significant they are. So rejects there. There's a bit of a test. And this is what I like about Heikin-Ashi. I'm sure other candles are similar. I don't know how it's worked out, but when you get Heikin-Ashi dojis that sit exactly, let me make this really big. This is what I love about Heikin-Ashi. When you see dojis that exactly the bottom, for example, that's the high, low, open. This is the opening price of this doji here, sitting on a key level. Price always bounces up. I see that over and over. So I'm keeping an eye out for that as well. But again, we can see we've rejected a retested level. And I mean, you could have got in early there if you had confidence, but there was an 80 pip trade. Almost every single trade that moves tests multiple levels. So you could just keep scrolling back and look. I mean, let's go back one more day. I mean, here, this is the open. I don't even have to look. I can just recognize candles at the open. We can see often you get these huge candles. You get stop hunts. But again, look at this. Price came down, tested this big round number, 48,700. This is a 4-hour trend line, double bottom. It also tested a 618 fib number, tested another big round number, broke above a fib number. That's my 786 from my daily chart. I mean, that was only going to go one way. Look, there's 1, 2, 3, 4, 5 levels that it's rejected. And when you get the more levels it rejects, I mean, obviously the open has a lot of volume. What is that? 260 pips there. But again, these are absolutely everywhere. So let's just go back to the previous day. Let's scroll back. Sorry, I'm on the 1 minute chart, so it'll take you a little bit. We look at the previous morning. So let's go back. Let's go back to Saturday. So here we go, Saturday. Let's look at the volume on Saturday, and we'll probably see similar patterns. So there would have been other things on a 3 minute chart, but we can see here again, look at all these levels that are being tested here. We can see this is a real cluster here of we've got a what's that, a weekly pivot, a quarterly pivot, a monthly pivot, and we've also got what is that? This is a level from my fib and another level from a fib. I mean, you can see how price kind of that was compressing price. Then there's a breakout. I mean, not a massive trade, but 120 pips, bigger than I thought. Now, this would have been a risk. Based on this chart, I wouldn't have taken this trade. I mean, that was a nice big move back up. There was 100 pips, but to me, that is risky because although we've got a nice reversal pattern, we've got a bearish, doji, bullish, Heikin-Ashi pattern, there's nothing would have given me confidence. Remember, it's easy to look now and see. But if you were looking, let's just put this chart back up here. If we were looking at price at this point, and we got that bearish candle. Remember, if you're live trading, that's all you're seeing. There's no ways I would have touched that. But I'm thinking, okay, there's something down here, but what is it? I can't see. So, I mean, where we're going, almost every level you can think of is going to be there. It won't clutter the chart because it's spread out nicely. But to me, that's high risk because two things. Number one, there are no levels there's no pivots. There's no big round number there. There's no trend lines. There's no fibs. And also, that level hasn't really been tested. Okay, there's a bit of a double bottom, but 2 candles, that's not a lot. So that is a trade I would not have taken. Obviously, the indicator would have shown more light, and there's a rejection, a retest. But then you can see how once price gets above this zone. So if let's just put this chart back up again, and then we'll just look at the morning. It's quite clear that in this area here, there's a lot of consolidation taking place. So again, you want to extend something like that, right? There's a lot of there was a bit of breakout, came back in. But again, if you waited patiently, this would have been, I wouldn't have entered there. So maybe not the best example. I would have loved to have seen a pullback in this area. But price won't always do what it's going to do. So what would have made this entry safe? You would have needed the indicator to give you a better example. Indicator would have shown you a safe entry. But just looking at the chart here, I would have struggled to have entered this trade because you can see this just took off all those bullish candles. If I had no indicator here, I would have waited for a retest. I mean, a trend line, just looking at price action, a trend line, that could have been a fairly safe entry, but you'd be nervous about price respecting all these pivots that are clustered together. So this would have been clear. In a trade like this, I would have liked to have seen a pullback, and again, testing one of these key levels, but unfortunately, that one just bolted up. So let's look at a couple more. We're probably not going to have a late night. Here's another one without the indicator, although this is, in a sense, has a low risk because it's retested a level here. So if we just did a little box over here, we can see clearly, it has rejected a level, but I would have liked to have seen a pivot, again, a trend line, a fib number, something in that area to make that safe. So those are ones that I don't take. So I'm looking to see if price is rejecting a tested level, even for re-entering a trade. I mean, it can be risky, and there are other things we need to look at, but look at this. Here's a daily pivot. Price comes down, and look here for 6 minutes or 7 minutes, it is stuck around this daily pivot. That's either an S3 or an S4. Doesn't matter what number it is. We just have the 3s and 4s on now. But then that can be a safe area. But look, that level has been tested. It broke through, then it retested multiple times. Bullish candle there. Again, indicator would have helped us. And that kind of dropped 176 pips. So even for re-entries in a move, it's something I haven't spoken about much. I don't like to enter moves that are already moving, except with where we're going. There'll be a much safer way. But again, if you want to re-enter a move, you've woken up, you've got a short chance to trade. There's re-entry point. And again, look here again. We've got 48,700 price breakthrough. You probably thought it's going to drop off a cliff, keep going. It comes back to retest. That's why we have big round numbers in the indicator. They're massive. So we can see a breakthrough, retest, and then a nice bearish candle. And even then, there was 100 pips. So even re-entering trades, one of the safest ways to re-enter a trade is if it's rejected, there's a rejection of a tested level. And again, you see this over and over. Okay, this one wasn't a massive trade, but have a look here. We can see, look at this. This is what I love to see. Wow, I love this. Look at this for how long was that? 8 minutes. Price tested a big round number, and it also tested a fib number. That's my 618 from a 4-hour chart. When you see multiple rejections, that's a sign, price is going to go up. So not a massive trade. There was not a big round number. Well, 76 pips. This was a big day. So again, I'm looking for the key levels here. Another one, this is okay. Big round number, look here to the left. Price 3 times price tested. This is a weekly fib. That's my 786. Sorry, my daily fib going right back to, middle of last year or so. A key level, and there's a move. So I'm looking again where there's multiple tests. Okay, this is before the open now, but here's a very good example. When you see this happening, and again, the indicator would help us to get in safely, because you're wondering, why should I get in there? But eventually you can see this price is clearly not going to go lower than there. There's a nice big stop hunt, 230, boom, would have stopped people out, but then it couldn't break lower than the pivot. And eventually price moving up, you probably need a trend line for a safe entry. So you could have gone from that high. Let's just see, probably around about there. Once price rejected the level, I would wait for the trend line, but there's a bullish candle, and you would probably need a fair stop loss. But again, look at this huge move. I mean, there were other things that tested on the way up, but if you broke the trend line over there, that thing went off a cliff. It's going right off my screen, probably 200 pips. So this is true for whatever Yep, question.
Yes, why wouldn't you, if you put that trend line back?
Yep, from that high.
Yeah, but come back to bit further down. Yep. Yeah, about there. Up a bit.
There.
Yeah. So you've tested that green line or yellow line how many times? About 12 times.
Yep.
And then you've broken a trend line there.
I would never draw a trend line through those wicks there. So, but I hear what you're saying. I would have at a minimum, I would have it over there.
Yeah.
And so you could have been tempted to get in there, but then the space is the problem. You're right into a fib number over there. So, but I hear what you're saying. That's a valid point.
Yeah.
You would have to you would probably need a stop loss. The potential is with right over there, there's potential for a pullback. So I've said before, when I draw trend lines, I'm moving it every time there's a high, I draw it again until there's a nice breakthrough. So I would have probably ended, I definitely would have drawn one there if I'm looking, because it's rejected a line, and then I would then keep drawing it. So that could have been a potential entry over there.
But you still had those 2 fibs above you. You wouldn't have gone then.
Yeah, no, I wouldn't. I would have, if I'd taken this, I didn't take this trade. That would have been my last bit of a trend line. So, this is a problematic, because space, if you were trading, like, for example, there is a safer entry, because now we've got a daily fib. So I'm just trying to give, general examples, not studying everything, but that is a very valid point. That at the minimum, we broke a trend line there, but straight into a fib. And then I would have redrawn it on the pullback. That would be my second one. And we can see price there. Price did break through. That would have been tempting, but again, no space. So it probably would have been too risky. So what I would have been looking at, I'd be looking at these levels here, because I'd be looking back, this is, when you see this level of respect, this is my daily fib, going back to last year.
Right.
There's strong price activity, rejections, acceptance. Look at those rejections. So probably this would be your safe entry if you were looking to enter this trade. Again, we're trading without an indicator. We're just trying to look at multiple testings. So again, looking left over here, looking back, we can see this definitely is a key level. Let's just see further back again. We can see how this is a key level. So you would need to be in the clear. This would be the safest. Because look, here was open space. So that would have been a safe entry. There's still 60. It kept on flowing up. So, but good point. I hear your point.
Right. Sure.
So again, I always emphasize that when I draw one trend line, I keep drawing it until I'm happy that it's broken through. So let's look at that. We'll end looking at the NAS, and then maybe there's some more questions. We're doing well for time. So let's just go to the NAS. I'll just press down arrow. Let's have a look at the NASDAQ. So here we go. I've got similar lines drawn in. So we're just going to, let's see where we are. We'll get away from, this is low volume during the day. Let's just look at this morning and see what we can learn here. So here we go. So this is trades I wouldn't take. So here, for example, now obviously the indicator is going to show us a lot more, and there will be stuff that could cause us to get in. But if we're just looking at the few lines I've got, although price is clearly testing a level here, there's no clear rejection. So it has been tested, but the level, there's no, I like to look for actual lines. I mean, at worst, we can see here that price made a high over here. So let's take that line off. If we drew a box over here, we can see the previous high. So that would be an indication. So yes, we can see price made a high there, came down, broke above, couldn't, broke below. But to me, that is still too risky because, I mean, when you're on demo and low lot size, you tend to, it could work. But I tell you, the higher your lot size go, the more choose you get. So the fact there's no big run number there, there's no pivots, there's no trend lines at that level, I would ignore that one. So again, over here, look at this one. Here's a good example. So obviously this is without an indicator. So here, look at this. There's no multiple tests of a level. So this is a trade I wouldn't, just saying without an indicator. Although this was a nice, look at this move. This was a nice juicy move, 60 pips there. That makes me nervous because there's no pivot, no big round number, no fibs. So nothing is telling me that's safe. And again, remember what I showed you earlier. We were looking, this is how you're seeing the chart. So it's easy to say, wow, I should have taken that. But remember, you're looking over here. This is how you're trading. This is all you're seeing. You're seeing a bearish candle. There's a doji. There's another doji. There's another doji. There's a bearish, full bearish on the Heikin-Ashi. There's no indication at that point that price is moving up. So I'll always look for rejection of key levels. So although, price will do what it does, that's not really to me a key level. Obviously, in terms of price action, there was something there we can't see. But I can tell you there's enough key levels to trade safely. All right, here we've got a big round number. And I think that is also overlapping a fib. There's a double, you can't see it, but there's a big round number. And there's also a 4-hour fib. I wonder if you can separate them. Yep, you can see now there's double lines there. So this is a trade I would be interested in. So we've got a big round number. And we've also got a fib. So that's my 0 or 1 on the fib. And this is a good example because look at this multiple. So again, we're looking at rejection of a tested key level. So clearly we can see price heading down. It almost breaks through there, but then there's a retest and up price goes. So that is a trade. Again, no indicator. I mean, you could have gone up to the daily fib, 55 pips there. So we're always looking for these levels. So we'll look at a few more. I'm sure we're getting the gist of it. Again, here's a pullback and a re-entry. Now look, again, no indicator. I would have liked to safely re-enter for confirmation, rejecting a key level. Clearly, there's something here that caused price to pull back and retest. The new indicator will probably show something there. But at the moment, based on what I'm teaching today, there would have been a risky re-entry because again, you don't know what the next candle is going to do. There was a high there. You think getting in there, it may reject that high, pull back down again. I mean, this is the open where there's volume, and that tends to break through levels. But again, although clearly we've seen price is rejecting a level, something's being tested, not really clear. So we'll just go back, look at a few more before I hand back to Ty. Let's just go back to Friday's trading. I can't remember if that was a bit of a... Let's go to the previous day. Where are we looking at? So we're back in the morning session. So here we go. Here's a good example. So again, we're looking at price rejecting a tested level. So obviously price has come down here. We've got a trend line here. There's a lot of stuff happening here. We've got a daily pivot. We've also got a big round number sitting there. Plus we've got a 236 from our 4-hour fib number. So we can see there's a nice W pattern here. But obviously getting in here would be highly risky because you got potential resistance. And so again, looking left, we can't go too far left. We can see, is this fib number a key level? Definitely. Look here, this price, we can only really explain these rejections here by this fib. So again, you got to be looking left to see, has price tested that level? And again, we can see there is some testing around this fib and the big round number. So again, although we've rejected a trend line and we've potentially also rejected this daily pivot, it would be too risky to enter there, obviously, because there's just no space. You know, you may think, oh, price has broken through, but retesting again. So there's a retest. And again, I would draw trend lines. So exactly, if I would have probably drawn a trend line here, because there's this W pattern. So if these lines weren't here, price potentially may have moved up. So again, there's a retest. So that would have been dangerous to enter. There's always a chance when you got all this activity, you know, patience. Is it going to retest? It does pull back. It retests again, this daily pivot, and finally it breaks a trend line. And there you're in clear space, and up it goes 84 pips. But again, I hear what Wayne's saying. Potentially, it could have been tempting to enter there. But again, no indicator. That would tell us a lot more. And pullbacks are inevitable. But clearly, once price breaks that trend line, and then we have a bullish candle, there's a high chance now that price is going to move up. If it does pull back, you got support. So key thing again, the way we like to enter trades, because price has rejected a tested level, is because those tested levels in a bullish move will serve as strong support, and a bearish move, obviously, resistance. So we can look again. Here's another multiple level. I'm trying to see, it's not really a nice bit of a W pattern there. So again, I draw trend lines all the time. So my first trend line probably would have been of that high. And so, but let's have a look anyway. Then I would have redrawn it. Let's just leave it over there. It would be my second trend line. So again, we have rejected multiple levels. Look left. Okay, price wasn't down there for a while, so that's not going to help us. Just looking at these key levels, nothing in sight. So again, we'll maybe end with this one. This is a 4-hour trend line. 3 tests, rejects that, up it goes. And then we can see here, we've got a big round number. Again, the 236, that seems to be featuring prominently tonight. So it's retested, retested, retested. And then your safe entry for this W pattern would have been on this candle over here. Again, no indicator. So there would be other things to look at. Obviously, it respected a weekly fib, still 55 pips to there. And to a big round number, 73, and another weekly fib, 85 pips. So again, I mean, the whole point of tonight, this is preparation for where we're going, is often we can become, with where we have been so far, we can be overly consumed by the trend zones and EMA crossovers, but those are simply telling us what's happening, not why it's happened. The why is key levels. So moving forward, these are going to be incredibly important. So again, look for clusters, look for the retests, they make it safe. Let me just see if there's any ones that weren't safe. We don't know what's happening there. There were levels, but when there's just a single, we may just not find one scrolling like this. Okay, there we have rejected levels, but I like to see more tests. So when there's just a lone candle, you know, that's not convincing. No level there, the price is rejecting. I'm trying to think, just having a last look. Okay, there is a bit of rejection, a double test. Up here, we can see we don't know what it's rejecting. So always look for these key lines. So that is basically how I trade. So again, rejection of a tested level, not just a level, rejection of a tested level. That was tonight's training. I will now end it here and hand back to Ty unless there are any questions.
So good, yeah, thank you. None yet, but I'll give everyone 10 seconds if they want to pop a question on there. But yeah, just reiterating that rejection of a tested level and reiterating the fact that, yeah, obviously what we're releasing soon is not on the chart, and there are a lot of key levels and a lot of things you've never seen before that would potentially highlight a bunch of these zones that have not got key levels underneath them right now. So I'm pretty sure I'm right in saying that, Dad. You can correct me if I'm wrong. But there's a lot that I know that's
a skeleton.
Yeah, I mean, you've basically just got big round numbers and pivots at the end of the right now.
Yeah.
And the odd trend line. Yeah, loads more coming. Well, I don't see any questions. Let me pin myself. And if you can unshare it. Oh, wait, there we go. Dave, will fibs, etc., be coded into the indicator, or are we drawing them ourselves like we are now? Great question. Dad?
Yeah, no, we are drawing them like we are now. We have to leave you some work. So, I mean, they're difficult to code.
And you've done it once, right? I mean, the ones that you're often drawing are from the beginning. I mean, when do you draw your daily fib from? Back in like April?
I mean, my daily fib, if we go to a daily chart here, let's reset. I mean, the daily, let's just turn this off. I mean, my daily chart on the NASDAQ goes back to 7th of April, 2025. And it's still completely relevant. So you only have to do that once a year. So I'm still waiting. It's still valid. We can see, I mean, I got a lot of other stuff there, unfortunately. It makes it a bit messy at the top. But you can see how this fib I drew from that low to the first pullback. The first pullback was still in the same month, but there was enough of a pullback to generate this fib. And you can see how at almost every level, there's a retest. Every single level of that fib extension. I mean, look at this high here. Went right up to, all the way up to, what's that, my 382. Comes down to the 618. This is a daily chart, remember? So they're massive. I mean, they're absolutely massive. And the same for just for a 4 hour. If I just do the 4 hour fib, I do it on the last, the last big high or low. I could probably update. I've updated this one on my other chart. This one is a bit out of date, but it's amazing. They still work. I would then, on my 4 hour chart, let me just delete that quickly. So we've made a new high here. I would do a fib from that high there down to this low. Probably like there. And you can see if you went to a 1 minute chart, you would see lots of tests. I mean, just on 4 hour candles, you can see it's respecting key levels.
Nice. Oh, thanks, Mike. I think there's an echo probably from, I just didn't turn my mic on to mute, but appreciate the answer, Dad. Yeah, little bit of work to still do, Dave, in that sense. But drawing those fibs, I mean, that's the kind of thing, you're going to do once and it's going to last you ages. If you're drawing them on a daily
even
or
the 4 hour, even this 4 hour fib, I drew it there. It's, they last, they go for, let me just see, how long has this one been going for? It goes for a couple of days, So, I mean, the first thing I do when I turn my charts on, I go to the 4 hour and I see, do I need to draw a new fib? And then if, so my last one went from there to there, this one is valid. And this one will stay until price makes a high and a pullback. The first pullback, I will take the new fib from that pivot low to the high before the pullback.
There we go. So and I'm sure we'll still do plenty of deep dive trainings on fibs in the future, which are going to be directly related to our new thing dropping soon. I love Vic is asking for the name. We pretty much have it locked in, but not ready to drop it just yet. But it looks good and it sounds good. I'm just going to say that. I've been toying around with some designs for it too. So, anywho, that's probably us. Any other questions? And nada. Thanks, guys. Vegas, no pressure. That's all right. I appreciate it, man. We're just excited to see everyone and hang out again. So, in light of that, Dad, if you want to unshare, then I can. Get us back. There we go, the two of us. In light of that with the event, if you are planning on coming and you could be 90% confirmed at this rate, please let me know. Just send me a message. I need to figure out, you don't send me a message. That might be a little intense. That might end up with like 3 dozen messages. I'm going to put a question into the group chat and I just need a thumb on that message, a thumbs up if you are planning to be there. And I'm not going to hold you to it. It's just right now I just need a rough indication of numbers so I can figure out some more details. But we want to make it a special one, guys. So, yeah, 28th of Feb. Let's see what else is happening here. I assume the current version disappears, so it's only V5. Well, firstly, it's not quite V5, but it's still appropriate for now. We understand what you mean. Not a toggle for which version you like. We're not going to delete it. We're not going to delete version 4 right away. Man, there's so many things I want to say right now, but for now, it's just remove it. We want to be able to give everyone time to transition and not just say like, right guys, the old is gone. We're going to give everyone as much time as they need to make that transition on their own. And so, yeah, great question though. Elise, thanks. Tim and Ty, thank you. Marika, question regarding trend lines and patterns. For example, head and shoulders and in different time zones or time frames, I'm guessing. What do you consider to be most relevant? Because I get confused sometimes deciding which one would be most important. Great. Oh, cool. Can see Elise is just coming. Good question. So let me just reiterate that, and Dad, maybe you can, I think I know what she's saying, but let me read it again. So regarding trend lines and patterns, for example, head and shoulders, and different time frames or time zones, what do you consider to be the most relevant? Okay, because I get confused sometimes. So my take on that would be patterns carry more weight on high time frames. There are fractals, so they will show up on lower time frames, but a pattern without some kind of confirmation will get you wrecked. Like if you, like I didn't point it out, but while Dad was teaching, you might even remember this from seeing it. There was a head and shoulders that Dad had there, and it had rejected some key levels, and it started to come down, but it didn't break it may have just gotten underneath the trend line. So a head and shoulders breaking a trend line, you would think that thing's going to fall down, but it actually didn't. It bounced back up and broke higher and ran because there was probably something there, some volume, some orders, something that caused it to violate what would be a pretty classic pattern. So hope that answers the question. If not, fire away again. Dad, I don't know if you got any thoughts on that. I might not be.
I mean, you basically trade the pattern on the chart you're on. But if you went to a higher time frame, like a 1 hour, there could be a head and shoulders forming, and that could indicate that price is going to rocket either up or down, depending on if it's reverse or normal. So, but it really, you trade the pattern on the chart you're on. That's how I've always worked it. And sometimes if you're trading on a 1 and you're looking at a 3, you can often see a clearer on a 3. The 1 can stretch out quite wide. But basically, you enter on the chart you're trading with when it breaks a trend line.
Yeah, and
the time frame.
We've got some more specific guidelines on time frames coming with this. This thing is designed for something specific. So we're gonna be giving you guys a lot on the day on that event. Another thing to think of, I remember there was a live trading session a morning where I was running it, and Dad, I think it was in Aussie, where we had a W, like a big W pattern on the Dow, and on the time frame we were looking on, it formed a W, like a full-on X, A, B, C, D pattern, like X, A, B, C. So the bottom right of the W was higher than the bottom left, and that's usually a sign that is going to extend higher than the origin point. And when you zoomed in, I think because that pattern took so long to play out, there was a W at the bottom of the left-hand side and right-hand side of that. There were basically W's within W's. I know it's going to start being ridiculous. Start to see that as well. And that just gives you extra confirmation. You've now seen a W, a double test, a double bottom at the bottom right side of a pattern that's already playing out. So you're looking at a higher time frame W, and then you're seeing a double bottom W on the right-hand side, which just gives you that much more confluence or a cluster that price is then going to fulfill the pattern you're looking at and the one that it's playing within as a fractal. So can get a little lost inside of that and seeing all sorts of shapes and things, but I hope that answers the question, Marika. Otherwise, feel free to answer it again, or we can have a nice chat in person at the event. Yes, thanks. You touched on the problem I had while waiting for it to fall and going opposite direction. Okay, cool. Yeah, and we'll do loads of this again in the future. We're going to have so much space and time this year to go deep on all of these kinds of angles and things. And once you can see what it is we can't wait for you to see, then also questions will get more specific, trainings will get more dialed, and it'll be a lot of fun. So that might be it. I can't see any other questions coming in. So guys, thank you so much for tuning in live tonight. Dad, thank you so much as well for putting this together, because I know there is so much inside of you right now, and we've got a big week. So we've got nights in front of us of recording content, editing content, putting it all together so that everyone can get this thing at the same time and rock and roll. So with that, guys, we'll wrap it up there. Enjoy. Let me check. No more questions. Thanks, Shordas. Amazing. Love and appreciate you all. Enjoy the rest of your Tuesday evening. We will see you on Thursday morning. Live analysis still. So stay tuned to the chat and trade safe. We'll see you soon. All right. Good night, everyone.
Yeah.